Hi. Most global stock markets are on a tear today. There is an increasing likelihood that Greece may not finally exit the Eurozone. Well, if that is the understanding, and the stock markets and currency markets do seem to be reflecting that for quite some time, because the euro has been rising against the dollar, in fact, for the last couple of weeks, even in the midst of a Greece crisis itself shows that the market seemed to be taking it rather lightly. Now, naturally, the stakes are very high, and there's a very high likelihood that Greece may try and avoid the default. But even if that were to take place, there are so many other factors which are lurking in the background which can come back and haunt the global stock markets, which I think you should be now quite wary of. The primary reason to be wary of is that the world stock markets are ignoring many factors. Even if the Grexit, Greece exit from the eurozone is avoided, there is a likelihood of a referendum in Britain regarding whether Britain should remain a part of the eurozone or should exit. So there are many exits. If it's not Greece, then whether Britain should remain a part, which could come back and haunt the stock markets from time to time. Now, of course, this referendum is not something which is on the anvil, but could come back in a year to haunt. But the factoring in of all these variables starts much in advance and therefore can haunt stock markets. Even otherwise, the US Federal Reserve has already hinted at a gradual rise in interest rates. And whenever that happens, that normally does lead to a rise in inflows back into America from various parts of the world. And whenever this happens, this normally goes to hit the emerging markets quite strongly. So there could be a reverse turn in the funds from emerging markets back into America in the midst of rising interest rates. But even here, there is another danger that is lurking on the horizon, and the danger being the fact that that U.S. Federal Reserve can impact short-term interest rates, but is unable to normally hit the long-term interest rates. And unless that happens, the probability of a bubble arising and bursting at some point of time is very high. This happened even in the midst of the housing crisis and can come back once again to haunt. So there are various factors which are on the horizon, and I would say that there is the fact of various startups getting tremendous amounts of money from the private equity money to be able to fund their mission, which so far has been generating mainly losses in most parts of the world. The internet startups, the ability to sell products on the internet at much cheaper rate than would be available in a physical form. These all could get disturbed quite strongly if the venture capital money starts turning around. And the probability of this happening is very high now. You could start seeing this happening as soon as in a few months from now. So I believe we could also be starting to get very wary of these startups which have been getting huge amounts of funding from venture capitalists, from private equity, uh, and the fact that the lot of money that has gone into these startups, if that reverses course, that could lead to a very ugly exit. So there's so many exits. If it's not the Greek exit, then the British exit. If not the startup exit, all these factors, these various exits could come and haunt the stock markets. And I would advise that I think a correction in the global stock markets is just around the corner. It is time to book profits and say goodbye. So take care, happy investing, and bye bye.